Good afternoon, ladies and gentlemen, and welcome to the Manolete Partners Investor Presentation. Throughout this presentation, investors will be on listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Just type in your question in the box and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet company dashboard, and we will email you to notify you when they're ready for you to review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you could give that your attention, we would be most grateful. And I'd now like to hand over to Stephen Cooklin, CEO of Manolete Partners. Good afternoon, Stephen.
Good afternoon, and thanks indeed, Mark. Good afternoon, everyone. Thank you very much for giving up your time to join this presentation. Look forward to any questions later on. So going through the slide deck here, the important notice, of course. So I am Stephen Cooklin, CEO of Manolete, also founder, chartered accountant, qualified back with Coopers & Lybrand back in 1991. This is the contents of what we'll be going through, particularly focusing on the government's reaction to COVID-19. Tomorrow with the budget should be very interesting. I'll return to that topic in a few minutes. But when I think of the world of investing and the world that the audience here are interested in, it's usually the kind of blue chip, kind of Monet type world of grandmasters that one is dealing with. But the world of insolvency, I think, is a more darker corner of the corporate world. So here I chose Francis Bacon, 3 figures at the base of the crucifix, as displayed in Tate Britain. So yes, insolvency, a much more challenging area, but I think, as we've shown with our results, as you see on the right here, we've tried to slice and dice our internal rates of returns in every way imaginable. So these range from 100+% upwards over our 12-year existence. And these are, of course, cumulative returns on an annual basis. And those are impressive by anyone's standards. And I think the consistency of returns at that high level is what's attracted people to the Manolete model. So Manolete was established back in 2008-9. So some very clever barristers at South Square, QCs, invited me into the idea of an insolvency financing litigation company. We tested the model out for a couple of years in an LLP, then incorporated it in 2011 and listed in 2018. And Manolete focuses exclusively on UK insolvency and insolvency-related litigation investments. And one of the main attractions of that is that we can purchase outright the claim. So we become the claimant company going forward, and that therefore gives us full control of the claim. We can make an offer to the other side. I had 2 calls actually from defendant directors today saying they'd got our pre-action letter. Could we just have a sit down and not spend money on lawyers, etc. And this is a kind of normal run of the mill for Manolete. Of course, if we were funding someone else's claim, we couldn't do that. It would be completely unlawful to do that. And that's the world of the other litigation funders, if you like. Whereas in insolvency, the big difference is you're in control of the claim. So that's 85% of the time we are in control, purchased the claim. The other kind of 20% of the time we're funding, but we're funding in licensed and regulated insolvency practitioners, indeed UK insolvency practitioners, who we dealt with time and time again. So we know these people very well. And again, I would argue that the more global litigation funders are usually dealing with funding a claimant on a one-off basis. And it's this kind of repeat revenue a referral stream that comes into Manolete from these insolvency practitioners and their lawyers that I think gives a very high quality to our revenue stream, because it repeats from the same kind of very trusted people. Since the IPO, we have established pretty rapidly our UK in-house network of very high caliber insolvency litigators. So these are lawyers, usually at partner level, up and down the country, who are working with us on our cases as external solicitors. And we brought the cream of that crop into Manolete as full-time employees. So in Scotland, the Northeast, Andrew, Leeds specifically with Graham from Addleshaw Goddard, Alison in the East from House Percival, Neil from the South, several in London, of course, Midlands, South West and Wales, and indeed Northwest, Dominic, who's been with us for some time now. So these lawyers knew us very, very well indeed. We knew with them very well. And other than one who had to retire due to ill health a few months ago, we have 100% retention rate, and they really do enjoy working with us, because I think being in control, again, that word, of the claims is really actually very exciting. Rather than just advising someone to do something, they're making the decisions, and that's really quite an exciting thing to work on every day. That team is led by Mina Halton, who's been with me for the last 6-7 years, and also on the board we have Judge Stephen Baster, who until he retired a few years ago, 2017, he was the most senior insolvency judge in the UK. He started as a consultant with Manolete in 2017 when he retired from the bench, and then when he heard that we were doing a listing on the public markets, he asked me if he could join the board. And I think that's a very good due diligence point, because if you think he spent most of his career listening to directors who'd done kind of very bad things in their companies, to actually take that responsibility and fiduciary role of being a director of any company, you would have said it's quite a brave thing for a judge to do. But he asked me, could he join, and he has been heavily involved since that time. So Manolete's cases, again, I think this is the second big differentiating point to broader litigation funders, is because we focus on a very niche area of the market. It's a 7 repeat type of cases that come through to us almost every single day. So we've invested in 600 odd cases to date, and they range from just £20,000. Those are done very, very quickly, within a few weeks or months, single-digit months, to much bigger claims of up to £70 million, and anywhere in between. As I say in that pie chart, these are the 7 deadly sins, as we call them, the kind of misfeasant actions that directors commit when they see the writing on the wall. They can see the company's going to go bust, and they do unlawful actions. So they may remove the whole of the business into a new co, what's called a Phoenix operation. An awful lot of that is going on as we speak. And that's fine as long as the new code that they control pays a fair and proper price for that business and those assets. Obviously, they're leaving all the creditors and all the debt behind in the old co. So we see an awful lot of those kind of cases, transactions that undervalue. They then prefer certain suppliers that they want to work with in the new co, or they prefer family members. So, for example, their mother might have lent the founder of the company, the director, £100,000 to start the business, and the director's only got a bit of money left in the company's bank account when it's about to go bust. He pays that money all to his mother, and the trouble is he's got to treat all creditors equally. That's the Insolvency Act 1986. Is all creditors have to be dealt with pari passu on an equal basis. And what a lot of you would have seen in the press and on the TV is that the amount of fraud going on and misfeasance going on due to these huge amounts of money the government has been pushing into SMEs up and down the country has been eye-watering, to quote the National Crime Agency. So we're expecting to be rather busy for the next few years. They're just, I mentioned the IRRs before. This is our track record of cases. So you can see the number of cases increasing rapidly, the very fast durations. So very few cases remaining from 2-3 years ago. So our cases are completed within about 11 months on average. And as you see on the right-hand side of that, the returns are very, very consistent. It's not like one big mega case has carried lots of mediocre cases. This has been a very broad spread of very high return repeat cases from the same repeat referrers throughout the UK. And I remember when I was growing up as a financial professional in the 90s, everyone took a lot of notice of the private equity business model that was emerging, and anyone who was worth their salt was trying to get into private equity. Very attractive returns. Typically, they'd have anywhere between 10, 20, 30 quite large investments. It would take 7 years to 5 to 7 years to exit a fund. So ours, if you remember, just 11 months on average, and the returns were very attractive at 25 to 30% IRR, internal rate of return. Whereas Manolete's internal rates of return there, you can see, are in 100%, 200%, and higher over the duration of our cases. So a very attractive market. The market opportunity, it's mainly corporate insolvency we deal with, as I mentioned, directors, but it also applies to bankruptcy. Some very wealthy people who've taken on a lot of debt, maybe property related, seek to move their assets about to family members, friends, etc., and then declare bankrupt, wipe out all their assets and kind of wipe out all their debts and then take their assets back a year or two later. So what we do applies in that sphere as well. In a normal year, there would be 14 to 20,000 corporate insolvencies, so liquidations, administrations in the UK, 40,000 bankruptcies. I remember someone saying to me once that of all those millions of companies that are registered at Companies House year in, year out, by far the most common exit route for any company isn't being sold to a trade buyer, isn't floating on the AIM market, it's going bust. So although it's a niche that we operate in, it's a very big niche. A key theme for later is that the number of insolvencies is sharply down at the moment, all to do with COVID and the government's reaction to COVID. So that normal of 17,000 is down to about 12,000, as we saw from the Insolvency Service just a few weeks ago. And this was something we picked up in the interim results. Professor Peter Walton, Professor at Law at University of Wolverhampton, he said in a normal year there's about 2,300 insolvency cases see the light of day, and they generate around £750 million of cash recoveries. So when you look at various ways of looking at Manolete's market share of that total of the insolvency litigation, it's about 9%. But our share of the funders in this market is about 67% of the funders. So the funders in total are only about 15, 16% of the entire insolvency litigation financing market. So the question is who's funding the rest? Well, that is actually lawyers and insurance companies working on a no-win, no-fee basis. So the liquidator would find a local lawyer and say to him, look, don't charge me anything on this case. The company's gone bust. I've got nothing to pay you, of course. But if we do make a recovery, you can charge double the going rate. And so on a good case, obviously, they would want that to go on for a long time so they could maximize their fees on that basis. But the Jackson reforms came in 2016, and they made that old model much less attractive, because the costs of those no-win, no-fees and insurance policies attached to that were 200% the size of the damages. So almost nothing was getting back to the creditors. Whereas under Manolete's model, only the costs are only about 10 to 12% of the recoveries. Now, this is actually very important because as we have on this slide, it says that the people being damaged by this are the creditors of the business, and the creditors are people like HMRC, which is obviously funding our NHS, our schools, our social security system. That's who is losing out by such low levels of recoveries being made because too much was disappearing into the pockets of the lawyers on no win, no fee, and the insurance companies who were doing these very, very expensive insurance policies attached to these no win, no fee cases. And this is why the Jackson reforms came in. So what's happening in the market is slowly that old way of doing things is reducing and the Manolete way of doing things is increasing. So our market share was only about 2-3% a few years ago. As I say, it's now closer to 10%. But things take time to change when one's coming through with new models. So here you see on this slide that the UK, as ranked by the World Bank, is just 14th in the world for insolvency rankings, and the main criterion for that is creditor recoveries. So you can see there that we're behind countries like Slovenia, Puerto Rico, Iceland are better places to recover if you've lent to a bus company than the UK, which is a pretty parlous state of affairs, which is why what we're doing is so very important to the UK economy. As you'll see here, the Royal United Services Institute think tank said that fraud on the public purse had now reached epidemic levels, and that was even before you add petrol to the bonfire of taxpayers' money, with the huge pandemic loan schemes, the CBILS, coronavirus business interruption loans that the government's been pushing through the door, completely understandably, obviously to manage the unemployment levels. Otherwise, things would have got really very, very desperate. But it doesn't mean to say that this money has been taken rightfully. So the government's used many measures to flatten the insolvency curve, bounce back loans, VAT deferral, rates relief, as I mentioned, the CBILS, etc., time to pay. And it passed a piece of legislation called the Corporate Insolvency and Governance Act hurriedly last year. The key measures were what they called the temporary measures, which is to kind of freeze in suspension these companies, thousands of companies that where their business model simply wasn't working. They simply had no revenue or very little revenue because of COVID. The government made it impossible to push a winding up petition or a statutory demand for creditors to make them pay up. And that obviously has been the main reason for the reduction in the number of insolvencies. Now, these measures were meant to have come to an end in December 2020, but then, as you'll all recall, lockdown 2 came upon us very quickly in December, and those temporary measures were extended through to March 2021. This is from the House of Commons library that confirms that. But of course, what's happening is that all the time, and this is why the timing of today's presentation is interesting, because tomorrow we will have the budget where Rishi Sunak will come clean, using his words, with the voters to tell them about the amount of debt that the government has taken on to fund all of these very noble and worthy and very important schemes. But clearly, the UK economy cannot afford to keep this going forever. So when these support mechanisms are withdrawn, whether in a phased way or in a cliff edge, I think they're going to avoid a cliff edge, which is probably just as well, because there would be, I think, hundreds of thousands of companies going bust if these were just suddenly turned off at the end of March. So we suspect there'll be some kind of phasing over the next 2-3 months, maybe tapering and down to around that end of June time, the 21st of June, when they're hoping all the restrictions will come to by and large an end. But as you can see there, once they are taken away, people like the Federation of Small Businesses are talking about 250,000 companies having to shut up shop. The BBC had a story of 800,000 to 1 million. The London School of Economics, a similar number. and RSM, interestingly, saying that this sustained high level of insolvencies after initial spike will stay high for the next 2 or 3 years, which again, I think our view is that is a pretty good estimate at this stage of the game. So how does this impact Manolete? Well, we've got what we call a production funnel. So liquidations happen. There's usually a period of time when the insolvency practitioner will investigate where the monies have disappeared to. Then they'll contact us with the facts of the matter and whether we want to buy or fund that action. And we tend to accept about 30 to 35% of those cases come through to us. We then fair value them while they're live cases. So we bought them, we're spending money on legal fees. It's the same 7 cases that we deal with every day of the week. And then they get completed with in an average of a year. And our money that we've put in is multiplied by almost 3 times in that period with a 90% success rate. And then roughly over 12 months, we'll be collecting in whatever's been agreed. The reason why people can't pay immediately is if you've settled a case, and 98% of our cases settle, very few go to trial at all. If you settle with the director for, let's say, for £200,000, he might have £50,000 immediately available through his own assets or friends and family, but then he'll need a payment period of a number of months to pay the balance. Funnily enough, on the bigger cases where there's a big insurance company involved on the other side, or a big corporate like Cobham, we had quite a famous case, they're able to pay immediately. There was a very large case, £7.5 million, that we settled just after our interim results. We got the first £2.5 million within a week, and all the rest of the monies, our share of it, will be paid within 12 months. So £5 million within 12 months. So these are serious numbers, even on very big cases. So what happened at the time of our interim results, 10th of November, we flagged very clearly, this was the graph we used at the time, that the number of inquiries, because of the government's flattening of that insolvency curve, our inquiries were coming down, therefore the number of cases we were signing was coming down, and this was very clearly flagged in words and graphically to shareholders and analysts. As I say, that was 10th of November. Everyone expected the temporary measures to stop in December. They didn't. They got extended, as we discussed, to March at least. Although our KPIs were very good in December, January started slowly. And when we sat down on our board meeting on the 26th of January, we reforecast Q4. And although the business was very strongly profitable and a record cash generation coming out of it, it was clear we wouldn't be hitting the Peel Hunt forecast for the full year, which is why we made the profit warning that we wouldn't be hitting those forecasts of, I think, £14 million EBIT. And we drafted an RNS, and our Nomad Peel Hunt told us to get that released immediately that afternoon, so there wasn't a false market in the shares at any time. Over the page, what I think a lot of people have missed from that announcement was how healthy the underlying business was. Yes, we were missing the Peel Hunt forecast, but we had completed 108 cases, which in less than 10 months, which was double the number for the previous entire year. The value of those settlements that we'd achieved was almost £24 million. On a heavily discounted basis. The cash we'd received from old cases, so remember, it's a bit like looking at the sun. When you look at the sun, that's what the sun looked like 8 minutes ago. When you look at Manolete's balance sheet, the cash coming in is from the cases completed a year ago, because it takes on average a year for the cash to arrive. So from those old cases, the cash was up 60% to 9.3 million. Our overheads are only around 4.5–5 million, so that was very healthy indeed. And this, of course, is from the old 54 cases, not the 108 that we had completed and had hardly received a penny on. So as a view going forward, that's going to be very attractive from a cash generation side. The bottom point there, in the last quarter, 5.3 million of cash have been generated, which covered not only all the payments to the creditors from our cases, all the legal fees of those closed cases, but it also covered all the overheads of the business and the running costs of the 250 odd live cases that obviously hadn't generated any cash at all yet. So that was very impressive from a cash generation basis. Over the page. So on the key deliverables, we were doing exceptionally well. The trend has continued on completed cases and cash generation. So 13 were completed up to the 26th of January this year, with another 1.2 million pounds collected in the last 12 business days. This report's now a couple of weeks old. But the weakness in the numbers was going to be, of course, because a lower number of new cases coming in. So the unrealized profits, the fair values were going to be down on what they were forecast to be. So that was the main driver to that. However, I think what's very important to appreciate is that the business is still very, very busy. These 11 in-house lawyers are working on 240 live cases. In the first 12 days of February, we signed 10 new cases. And in fact, I can update that now. So for the end of February, we signed up 16 new cases and we completed 16 cases. I've put here on the slide just a flavour of some of the cases that come in on a daily basis from multiple insolvency firms all across different regions of the UK. You see there London, the Northeast, the Southwest, several from Scotland, the Northwest. That's the UK-wide network. There are the 7 deadly sins, the claim type there, transactions at undervalue, misfeasance, unlawful dividends, and then the headline values of the claims. So we've got 10 million, 4 million, 3.5 million, and then a bunch at 5-figure. These are all hundreds of thousands of pounds. So just on those 21 cases, there were headline claim values of 29 million pounds. So this is what Manolete looks like when the government's artificially suppressing insolvencies in the UK in a very, very dramatic way. It's still incredibly busy in our shop. As far as the balance sheet and cash, very, very strong, as you will have surmised. So at the year end, so March 2020, we had drawn down 8 million of our 20 million revolving credit facility with HSBC. We've not drawn a penny more from that to this very day. So that's exactly the same position. So any idea that Manolete, or any accusation that Manolete is somehow hemorrhaging cash, is patently false. Because when you think of that record 179 cases we've bought or funded, and then the fact we're running 240 live cases, there's been a huge amount of organic cash generation, which has meant we haven't had to extend the revolving credit facility at all. We've then run a whole number of forecast models on various scenarios, including what could be a tsunami of new cases coming through, or certainly an uplifted spike for the next 2 or 3 years, and there is no prospect whatsoever of us needing to raise any new equity for the business. Really, we're looking now at a much more mature business than the one that was floated 2 and a bit years ago, that's generating an awful lot of cash organically, and we've got a lot of headroom in the RCF, another 12 million of the RCF. What was quite interesting, that against a background of all the government step in on the economy and the background we've been through here, on the 19th of January, quite out of the blue, I was contacted by an investor group called Mithac. Some of you will know Mithac. They're I believe the largest institutional shareholder of Burford Capital now. So they know our sector very well. The models, as everyone understands, are very, very different. Burford just fund cases, albeit on a big global basis. Manolete, we're buying most of our cases and just in the UK. And Mithac explained that they were they were very attracted by Manolete. This was obviously before the profit warning, and wanted to take a significant minority but very passive long-term investment in Manolete, and they had a target level they wanted to get to, so they either achieved that or they didn't make the investment at all. So most of it happened after we put the market update, the profit warning out on the 26th of January. So they took the position of a number of cornerstone investors who'd done very well since the IPO at 175p. I sold 2% of my stake to get them to their required level of investment. John Moulton, who's the other big shareholder in Manolete, has always been a very unwilling seller. He sees huge value in the business going forward. And that's how we got Mythac to where they needed to be. So what we'd swapped was cornerstone investors who'd done a fantastic job for us for a much more long-term strategic investor in the business, which was, we think, a very good thing indeed. Our brokers, Peel Hunt, understandably asked me to sign up for a hard lock-in for 3 months and then a softer lock-in for another 3 months, which was absolutely fine, of course. But that shouldn't be interpreted at all of me selling any further shares. And I'd stress that under the HSBC RCF, I can't go below 10%. So please don't read into that I'll be selling shares in as soon as these lockups end after 6 months' time. The investment thesis, well, 2021 should have really been the fruition of all that hard work that had been put in the ground of Manolete and the UK network. Very high level of realised profits, which will be clearly reported with all that huge number of 108 cases realised. I think we're up to about 129 now. Gross settlement values of, I think, 29 million pounds, which is just astronomical, so way above forecast for that. The cash delivery, very, very strong indeed, which we've touched on. Where the weakness is the new case pipeline in the fair values, the unrealised profits is where the weakness is because of Rishi Sunak kind of standing on our hose pipe of insolvencies. Not completely, as you can see, we're very busy, but there's a great big bulge building up now behind Rishi, which he's probably going to come clean on tomorrow, that economic reality, the distortion is going to have to be corrected sooner or later in the economy. So I think the questions that have been asked about Manolete in the past since the IPO about fair value accounting, will these turn into realised gains? Well, as you can see from the data I've presented today, well, a resounding yes. 29 million pounds worth of completions this year, turning in those unrealised profits into realised profits, and then into cash generation. To repeat, 5.1 million cash in the last quarter alone, covering all running costs, including 240 live cases, which is outstanding. The government understands, being made very clear that they can't keep these support measures going indefinitely. We will hear tomorrow what the plan is. I doubt whether all the measures will be turned off immediately. As I say, my own guess, but it is just no more than a guess, is that there will be a tapering and maybe some specific support to certain sectors. It was good to see the arts sector and a couple of other sectors being targeted for specific amounts of money by the government, which was great to see. We're obviously very busy. The number of new cases continues to do well. So as I said, there were 16 for February, 17 in January, 14 in December, and 11 in November. So the trend, as you can see, is creeping back up very nicely, but not at the levels pre-COVID, which were going up to 26 cases in a month. So that's a kind of, we're from 26 new case investments a month down to more like 14, 15, 16, 17 at the moment. Picture of our friend Rishi. So as he said in December, the end of the pandemic is starting to begin, which is fantastic with these amazing vaccines that have been produced. But the economic emergency, Rishi's words, Richie's words, has only just begun. And Rishi Sunak in Parliament were on record said the UK was to suffer the worst economic decline for 300 years. So it's a morbid conclusion for the economy as a whole, and I think a lot of pain in many, many sectors. But the rather brutal truth of it, back to the Francis Bacon painting where I started, is that although this has slowed Manolete's progress in the short term, this very likely underwrites a very strong performance of the business in the medium to long term. The recent weakness in the share price, which obviously is concerning for all of us on this call, and maybe of interest to those non-shareholders, is that it brings Manolete much closer to its IPO price, which is 175. It's at 280 today, but it's risen strongly in the last couple of weeks. And what one's buying is a business that is really 3 times larger than the company that was floated in December 2018. I take the numbers here in the boxes from the full year March 2019. So the number of new cases signed then was 61. For the first 10 months of this year, 179. In that 2019 year, we completed 35 cases. As I stated earlier, we're up to 129 as of today, so almost 4 times bigger than the year we IPO'd. The aggregate settlement values are up almost 200%. Number of in-house lawyers who have really driven the scale of the business up 175%. Number of live cases up 187%. So as I say, there seems to be a slight disconnect between where people are, or where the market is got the company and where the company's actually got to. Obviously, no one's got a crystal ball on what's going to happen if there were to be the horror of one of these mutant strains that really got hold, and a new lockdown, new economic support measures. Obviously, the rough waters that we've encountered over the last few months would probably continue. We would argue that it cannot continue forever. That really brings me to a close on my presentation. Thank you very much indeed, and very open to any questions. If I hand back to Mark.
That's brilliant, Stephen. Submit your questions using the Q&A tab situated on the right-hand corner of the screen. But just while the company take a few moments to review those investor questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet company dashboard. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you will be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations, and we would be very grateful if you could allocate just a little bit of time. Stephen, I know I haven't given you a lot of time to review the Q&A. If I could just ask you to click on the Q&A tab. If I could ask you to start at the top and work your way through. If I could ask you to read out the questions, perhaps who they're from, and give an answer where it's appropriate, and then I'll pick up from you at the end.
Super. Kieran, thank you very much indeed, Kieran. So his question is, who do Manolete consider to be the major competition for them in the current space? Do you have a competitive edge on the competition? So super question, one I've been asked many, many times. The short answer is the competition for Manolete is the old model, is a no-win, no-fee model. As I said, when I was going through the market analysis, about 85% of the market is still done on the old way of doing things, a no-win, no-fee, and 80 insurance, where the costs are 200% the size of the damages. And it takes time to educate insolvency practitioners and their lawyers to move over to the Manolete way. When you look at then that 15%, which is controlled by the third-party litigation funders, Manolete is a 67% market leader in that segment. The next highest was just 5%, which was Harbour Litigation Funding, which is an excellent outfit run by a lady called Susan Dunn. Susan does not operate, Harbour does not operate in our space. Harbour's very much, like Burford, focused on much larger ticket, international, global, commercial litigation. There have been a number of firms that have tried to compete. Rosenblatt, most recently, with their Islero product. But if those who follow this sector quite carefully, it appears that Rosenblatt are aiming at the smaller commercial end of the market, so kind of the Burford type and Harbour litigation type end of the market, but the smaller value. So Burford Harbour, I believe, are kind of, they want to be putting 10, 15, 20 million dollars to work in cases normally. So there's smaller commercial cases where I believe Rosenblatt's litigation funding business is aimed at now, much more than insolvency. They seem to be saying they're looking at later stage insolvency cases, which doesn't make any sense to us, to be honest. That's really the riskier end. So they might want to look at that. The other firm that who did try and compete was Ferguson Litigation Funding, the law firm. Again, had set up its own internal fund. That started in April 2016 when the Jackson reforms came through in insolvency. And to cut a long story short, as we listed in December 2018, Ferguson Litigation Funding liquidated itself, and all its people left, obviously, at exactly the same time, bizarrely. So they are no more. Why is it so difficult to compete with Manolete? I think it really goes to this referral nature of our business. We've been in the market for many years. The people who work for Manolete have spent their entire career as insolvency litigation practitioners, lawyers, or liquidators in the UK, and they are tried and trusted people. They understand the unique challenges of the sector we work in, and we've worked with more than 200 plus firms, insolvency firms, on a repeat basis. And when I say 200, I'm counting, for example, Begbie's as one, even though we've worked with about 15 different offices of Begbie's, and always on a repeat basis. So whenever we've worked with a liquidator or administrator, trustee in bankruptcy, and we've backed a case, they've always come back with further cases. And I really don't think the other litigation funders can say that, because they're dealing with a one-off divorce case or a one-off competition case. It just hasn't got that kind of high quality repeat referral nature to their markets. So Kieran, thank you very much. I hope that answered your question. Moving on to Simon C. Thank you, Simon. What capacity do you have to take on new cases? Is there a maximum number of cases you can manage at one time, and how do you scale this up? So again, quite a common question. Thank you, Simon. So our lawyers, we think, can cope with at any one time. Remember, they're not doing the legal work. There's always an external law firm, sometimes barristers involved, actually doing the day-to-day processing of the case. We are really supervising and just taking the decisions on those cases, because there are cases. So any of one of them can manage around 30, 35 cases at any one time. As I said, we've got 11 lawyers, so that gets you up to about 300, 350 capacity. We've got 240, 250 live at the moment, so we've got a nice buffer there to work into. We've got a new lawyer coming on board in a couple of months' time in the Midlands, a lady we've known for a very long time, delighted that she's accepted our offer. So that'll add another 30 and good coverage in the Midlands as well. So I think that gives us plenty of headroom. And the second part of the question, how do you scale it upwards? Well, it's again just accepting a new lawyer into the fold. And as I say, we're being asked by QCs downwards to join Manolete on a very regular basis. So that's never been a critical constraint at all in growing the company. Andrew C asks, maybe a similar question here. You mentioned previously in-house lawyer can manage up to 25, 30 cases. What does this figure increase to if you hire junior lawyers to support the current team? And what would you expect those junior lawyers per year to cost? Super question. So phase 2 of the regional network is, under these very senior lawyers, is to add those junior lawyers, exactly as you're suggesting there, Andrew. And they would be doing the smaller tickets, so director loan accounts tend to be 50,000, 100,000 pounds. It would kind of cut their teeth on those kind of cases. And I think their cost probably would be more like your 60, 70,000, whereas the more senior lawyers are more like 100,000 plus kind of 15, 20,000 pound bonus a year. So that's kind of the rough scale of it. Leo asks, do you receive interest or penalties for payment plans or delayed recoveries? Again, excellent question. So Leo, we don't. So the reason why we've looked at this very closely, we would start to encroach into offering credit facilities to individuals. And that gets you into a whole area of the law that really we didn't want to get into on a regulatory and capital reporting standpoint. So we don't. Our returns are very, very high, as you've seen, on a very consistent basis. So we thought, if anything, it was maybe skinning it too close by charging a strong interest on top. What we do have, and to enforce our payment plans, is very importantly a legally binding settlement agreement that the other party has signed up to. And this is why we really don't like going to trial, because if you go to trial, then the director loses. He's been told by a judge he's got to pay £500,000, £1 million. The director hasn't agreed to that. In fact, he's fought tooth and nail not to pay that. So even if you get a paper in a judgment from a judge saying, Manolete, you're owed £1 million, whether you're going to get it from the gentleman or the lady is another question altogether. Whereas in our 98% settlements, we've sat down with them online or physically, and we've agreed and we've drafted up a settlement agreement that is fair and manageable for them, and that's why we've had such a good record of recovering the amounts owed. If they breach that settlement agreement, they are in breach of contract. Within 21 days of issuing an immediate statutory demand, we can have bankruptcy proceedings, and they lose everything if that's the case. They lose the house, they lose their business, their shareholdings, their pension can even be got into, and that's why they've settled with us in the first place. It's they want to protect those assets and carry on. So that's a very big weapon that we yield, and a weapon that can be wielded very, very fast. Abby asks, how competitive is the process of winning new cases, and is there a preferred size of case you'd look to take on? Excellent questions. So competition, now and again, there will be, the liquidator will tell us that there is one or two other funders looking at this. So there's a firm called Henderson & Jones, a couple of very nice guys, quite young guys, been running a similar model to Manolete for about 4 or 5 years now. Please look at their accounts in Companies House. They're micro accounts, so they've not scaled the business. Maybe they don't want to scale the business. They've got some very good handful of relationships, I think, in particularly in London, and so they've got a kind of niche there. So now and again, Henderson & Jones and Manolete will be bidding on the same kind of case. Preferred size, well, the nice thing about the small cases is they tend to be over very quickly at slightly lower returns. So usually we're getting about 180% return on investment, but in about 4 or 5 or 6 months, which in IRR terms is very, very high indeed when you annualize those numbers. The bigger cases take longer, more like 18 months, 24 months to complete, but we're talking millions of pounds. So I mentioned the £7.5 million settlement in November. Before that, we had a £15 million settlement a month or two before. Our money multiples, so for each pound we put in, we got I think £23 back, which again is eye-wateringly large, never seen before. You're talking kind of Google investment levels of return on these things. So you know, we love those, but for very, very different reasons. So the money we put into both the upfront and then the legal fees on the £7.5 million case, for example, were £158,000. Our share of that £7.5 million was about £2 million, so a fantastic return. On the £15 million claim, we put in, I think, £250,000 of total costs, and our share of the award of the settlement, was I think about £4.5 million. So yeah, just unheard of returns. Jason S asked, do you ever compete for deals, or are you usually the sole bidder? The second bit of that question, we've answered the first, Jason, thank you. But the second bit, usually Jason with the sole bidder. So as I said, every liquidator administrator that's ever had a case financed by Manolete has been delighted with the outcome. Even if we've had to pack up and go home because the director's gone bankrupt and there's no assets, which is very rare, but it happens. We've given it a go. We've showed to his regulators he's done a very good job by getting Manolete to finance that. But we're usually 90% plus of the time you're getting very, very quick, strong cash returns into these insolvent estates for the creditors, and so these are very, very busy people. What you tend to find is that they have very trusted relationships, and I would say Manolete now is ubiquitously the trusted relationship in the insolvency sector. Andrew C asks, just taking a swig of water. Quite a long question. Stephen, Manolete is 6% market share based on the number of claims. On cash realizations, Manolete is roughly 3% market share. Does achieving 10% market share necessitate that you successfully acquire a few very large insolvency cases per year? At what headline claim figures do you see? Yes, interesting. So yes, I think what you'll notice with our numbers is that the average case size has been gradually increasing year after year as we get more and more bigger cases. A lot of you will know that we quite normally at the year end do a slide of what used to be our kind of 5 biggest cases, now our 10 biggest cases, and I think last time we did it, our 17 biggest cases, all because they're over £1 million headline value. So out of that 240 odd live cases at the moment, we're probably up to, I don't know, maybe 25, 30 particularly big cases. So that average is tending up. It won't tend up forever because the market doesn't look like that in the UK. So Professor Walton said that yes, there's a decent number of outlier cases, so there's a kind of sine wave, if you like, and the peak of that sine curve is about a headline claim size of £500,000 that gets settled for about half that, and that's a good rule of thumb in our line of work, is that you get about half the headline claim value would tend to be in a mediation what you'd walk away with. Sometimes better. We've been at mediations, we've got every single penny plus costs. Sometimes worse because they just haven't got the money. You're convinced they haven't got the money and you just want to take what's available, take your return and move on. Where do you start bumping into players like Harbour, Burford, Vannin? Very, very, very seldom. I can't remember a time ever in 12 years where we've been competing against Harbour, Burford or Vannin on any of our cases. It may be they were somewhere in the background, I don't know. So that is my hand on our honest answer. I think where they're very active in the insolvency world is more the cross-border insolvency. So these huge fraud cases in the Cayman Islands and in Antigua and in Switzerland. Manolete just don't touch that kind of claim. Burford's got a fantastic big enforcement team. So when they've got judgment against a shady international fraudster in the Cayman Islands, and then he moves all his assets to Switzerland and then to Australia. Burford have got the infrastructure to chase these people down. We haven't. We've got no desire to. It costs a huge amount of money. It's just a very, very different business model to Burford's. We're aiming at classically the director who's phoenixed 5 or 6 companies, ripped off his creditors, ripped off the HMRC, not paid his taxes, flipped his employees around, ripped off his pension fund. And hey presto, he's got a £10 million house in Surrey and a nice bunch of buy-to-lets in Dorset and Devon with no debt on them, because he's extracted so much cash tax-free from all these companies. That's the kind of typical person that Manolete is after. Paul M asks, has the number of new cases being signed dropped by the same percentage as the drop in insolvencies? That's a very good question. So Paul, the number of the answer is no. So the number of insolvencies has gone down, I think, by about 40 odd %. The number of new cases has increased in Manolete this year by, I think I had it at about 30% as of a day or two ago. So we're actually up year on year. The reason for the profit warning is that Peel Hunt and Liberum were expecting us to keep on these kind of huge 100% increases in the number of cases. That obviously isn't going to happen. We warned on that in November, and then we warned on that in January. So still increasing, still very, very busy, cash coming in very, very strongly, but not those fair value of new cases at the moment. Will it all catch up once the government takes these supports away? Well, we would argue that's a very likely thing to happen. Stuart B asks, hi Steve, thanks for the presentation. Can you comment at all on the reduction in holding by Michael Faulkner? I'm glad someone asked. Thank you, Stuart. So Mike, very old friend, he and I got divorced at pretty much the same time. We were both 40, so going back 14, 15 years. We shared a house together in Ealing. I set up Manolete. Mike chucked in some money at the time when it was just an idea, a glint in my eye. And that's where he got his shareholding from. Mike had not sold, other than the IPO, he had not sold any shares. He's way past his lock-in period. I saw yesterday, I think the RNS came through on the email and then onto the stock exchange. I had no idea Mike had sold some shares, but he's never had anything to do with the business. Yes, he was director for a number of years, but purely as a kind of representing himself as a shareholder. He's never had an operational role in the company. So if it's a free world, he's collecting on the fantastic support he gave me and John Moulton, who hasn't sold a bean other than being forced to in the IPO. So that was the story behind Mike. Russell B, if insolvencies increase as per Manolete's prediction, I don't think it's just us, Russell, in fairness. I think London School of Economics, Federation of Small Business, BBC, I think everyone's predicting that they will increase. So Manolete's capacity to take on cases with the current team is in place. Maximum number of cases capacities with the current team. Are the plans to put more lawyers in place for the future growth? So absolutely. So as I mentioned, this lady joining in the Midlands in the next couple of weeks, the lady joining in Liverpool in June, which we think probably will coincide in an increase around that time of year. We will then watch very closely. That should give us capacity for about 400 cases a year by the time those two ladies have come on board. And then we'll see how things go from there. As I said, Russell, there's never been any shortage of people knocking on the door wanting to join Manolete. So that's never been a critical constraint. Stephen W, should the increase in cases happen as projected when government support measures are withdrawn? At what rate can Manolete expand its capacity? So again, I think we've answered that in all fairness, Stephen. And no criticism to you because you couldn't have known what other questions are coming through. Ivan asks, how is the Manolete gain on vintages tables translated to the income statement? So the Manolete gain on the vintages table is you've got the settlement monies, you then take off costs, you then take off what the share going to the insolvent estate, the creditors, and that is Manolete's profit, its gain. And that should coincide very closely with the realized profit in the accounts. But bear in mind that the vintages table is based on the year that investment is made, whereas a profit and loss account will be the realized gain with the year that case is closed. So there'll be a temporal disconnect between the two, Ivan, that probably is more for Einstein than me. So just so you understand the two different bases of why those should be different. And we do update the vintages table every time we do it. If we've had to take a provision on a case or we've had to write off a small amount, we'll immediately reflect that in the vintages table. DH asks, hello, how much impact is the new business startup at Rosenblatt impacting? Well, Nicola Falston, their CEO, said they'd signed one case since one insolvency case. So we've signed 180. So I think that hopefully answers your question, D. And they're not looking to buy insolvency cases anymore. That's my understanding of what Nicola has said. Hope I haven't got that wrong, but that's my understanding. They're looking at really funding commercial cases at the small end of Burford or doing much later stage insolvency cases. Ivan, Mark, as long as we're okay to carry on, maybe I'll do a couple more questions. When Manolete purchases the right to a case, if the case is won, how much does Manolete pay to the creditors in an insolvent estate? So again, super question. Where it starts, Ivan, is so we get a settlement, money comes in, we get our costs back first, always, no matter whether we're purchasing or funding, always get our money back first. Every funder will do that. And then the remainder, the net gain is split usually 50-50 between the insolvent estate, the creditors, and Manolete. But as that net gain gets bigger, so on those bigger, the £7.5 million case, the £15 million case, so once you get into £1 million, the share to the creditors will increase to maybe 55-45 or 60-40. Then if it goes up another £1 million, it might be 60-40, then it might be 70-30. We tend to stop it around that level. So if it even gets to 10 million, 20 million, it's usually 70-30 split. Maybe in one case, it's been 80-20 for but that's out of 600 plus cases. But the norm is about 50-50 until you start getting into quite serious numbers. Douglas G, I appreciate the sentiment and updating the market as soon as possible after the board meeting, but for the sake of an hour and a half, yeah, look, Doug, it's a great question. Why didn't you do the RNS in the morning? Douglas, I understand. I thought that's what was meant to happen. I used to be an investment banker, but I followed the advice of our nomad. I followed the advice of my chairman, and the advice we were given and our PR advisors was to get the announcement out immediately because of the MAR rules, which is the market abuse rules. We decided that we weren't going to hit the forecast at kind of midday. We drafted the release, and all those advisors around me and my colleagues around me said, well, you have to get it out immediately, otherwise there's a false market. So I'm sorry, those are the rules as explained to us as a board. David B, how will the expected future tsunami of case affect the no-win, no-fee model versus the Manolete model? I don't think the tsunami's really going to change it. I think, David, I think Stephen Baster, the judge on our board, I think he summarised it best for me. He started working with us in 2017. He started coming to the team meeting. So once every week, every couple of weeks, we get the entire team of lawyers now around a Zoom call. They all used to come in physically and sit around a very big table. And Stephen used to sit there listening to us going through every single live case. Stephen then started coming to the odd mediation with either me or some of my colleagues, understanding how we work things out with the defendants, obviously at board meetings. And Stephen's view to me is that looking at the results and the ethics of what we do, his view is that almost all insolvency litigation should be done this way, is what he said to me. It's a very fair model. It's a very effective model. Slow justice is no justice. The time it takes for a CFA and an ATE model to get a result is on average about 4 years. The head of insolvency in Gately, London, went on record at a conference and said they've got a huge amount of WIP in there, about £10 million of WIP, and it takes them about 4 years to recover their WIP on insolvency, no win, no fee. Manolete, as you've seen, is very much faster, and therefore the costs are much lower, and therefore the amount going to the creditors, HMRC, the pension funds have all lost out is much, much better. And that's important for the UK post-Brexit and post-COVID. Quick question, cartel cases. Mark, I might hand back to you after this one.
Yeah, there's about cartel cases, so that's probably a good one to end with.
Brilliant. Are you able to offer an update on cartel cases, specifically the current carrying value of them, but a general update would be appreciated? Sure. So what we said at the interim stage was we're now going to be looking at these on an annual basis. Before it had been on a semi-annual basis every 6 months, because it was quite a new group of cases. So our perception of it was changing much more rapidly. Now it's a lot more stable. We've had a report by our expert valuers that came in of those cases at the interim stage. So that'll be central to the board's discussions at the year end. But what I would say is that the one area where we are at the affected by the slowdown in the courts is actually the Competition and Appeals Tribunal has been slowed down heavily by the COVID impact. So not as much progress on the issued case, the Royal Mail's case, and a number of other cases hasn't progressed anywhere near as far as we were hoping. So it'll be muted, I would say, any movement in the fair value, if at all. I don't want to prejudge the board's deliberations if at all. Those are my personal views. It's not been the kind of progress that we've seen in years before. What I would also add, and I said this at the year end, we are now going to start getting close to issuing our claims on these cases. So I think we need to be very careful in the interest of shareholders that we stop talking quite so openly about the valuations of these, because we don't want to communicate, obviously, to the paying defendants what we might be happy with. So please bear with us on that as we move to the kind of execution phase of that. I must say that was a tremendous group of questions, Mark, but probably in the interest of time, I should turn back to you.
That's very kind. Thank you very much indeed, Stephen. As you say, I think you've probably addressed most of the questions submitted by investors today. And of course, thank you to everybody for submitting those, and any questions, of course, we haven't got round to seeing. We will obviously review those. And as I said earlier, publish the responses on the Investor Meet Company website. Stephen, I guess just finally, if I could ask you for a few words to wrap up. I know feedback is particularly important to the company, and obviously after this, we'll redirect investors to provide you with feedback.
Sure. Well, again, thank you everyone for your time. I think, in summary, COVID and the government's reaction, completely understandable, very important for so many reasons. In human terms, is completely understandable. The impact on Manolete has been to slow us down at the huge rate of progress we were making every year, which is almost doubling our KPIs and financials year on year. That has slowed down. It's still, I think, impressive by anyone's standards. These restrictions cannot go on forever. We will see tomorrow. We should get some signposts from the government when they will start easing those. And I think that underpins Manolete's value for the next 3, 4, 5 years, because just like the Lehman Brothers crisis is still in court today with lots and lots of lawyers, 12, 13 years later, working on that case, the effects of the pandemic and the economic fallout of that will last for years and years and years. And as morbid as it is, Manolete will be a beneficiary of that, because sadly, directors would have abused an awful lot of their position and their responsibility and legality of their position in these very testing times. Again, thank you all very much indeed, and thank you for your support as well.
That's great. Thank you very much indeed, Stephen. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide feedback. If you access meeting via our website, then the feedback page will appear. If you access this meeting via the link sent to you by email, you'll simply be asked to log back in to submit your feedback. We'd be very grateful if you could spend a few moments just to give the company your views and expectations. On behalf of Stephen and the management team at Manolete Partners, I'd like to thank you for attending this evening's presentation. That now concludes today's session. Good evening to you all, and thank you once again for your time.